to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin, Ethereum, Cardano, XRP, and gold. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice, and I'm not a financial advisor. We're gonna start off here with Bitcoin, and guys, yesterday we had a pretty big drop. We were pretty much at 109,000, 108,000. We went all the way down to like $102,000. So right now it's 7:10 p.m. Eastern time. The daily candle closes in about 50 minutes, so it's very important to see how the daily candle closes. But starting off here with the weekly chart, right now we're indecisive. We only have 2 days before this candle closes. The stochastics are toppy, they look to roll over, and we're still far away from the 21-day moving average, which is at 94,640. We head over to the 3-day chart. We see that the stochastics are on the bottom, possibly going on the way up, but look at this big red candle here. This closes in a day and 1 hour. We are still above the 21-day moving average, which is at 100,198, so that's still currently bullish. On the 2-hour chart, stochastics are on the way out. We dipped below the 21-day moving average, but we're currently above it, and there's only 50 minutes before this candle closes, so this will be interesting at 8 p.m. Eastern time to see where this closes. So let's see what happens with there. Now on the daily chart, unfortunately we fell below the 21-day moving average yesterday, and we're touching we just bounced off the 50-day moving average. We do have a green bullish hammer at the moment. Again, this closes in about 50 minutes. 8 p.m. is going to be very important to see, but look at the stochastics. They went up, they're starting to roll over, and we are below the 21-day moving average. So if we cannot get above the 21-day moving average, this is going to be bearish. Right now the 21-day moving average is at 106,500. So let's see how this closes, but I'm liking that we do have support here on the 50-day moving average. As long as we could keep this, the sentiment is still going to be kind of bullish here. We head over to the 8-hour chart. Yesterday I left you guys with a cup and handle possible pattern that could happen. We went below the pattern like drastically because we did fall down to 102,000, but look how we bullishly back into the pattern here. And again, 50 minutes before this candle closes, the stochastics are low, so I would say that this cup and handle pattern is still in play. Should break us out to about 113,000, close to 114,000. Now if we head over to the 4-hour chart, I had this in a falling wedge. I changed it from the falling wedge to a flag, back to a falling wedge, and we definitely dropped down below, so we're going to elongate this a little bit more, and currently we're back into the pattern. So I would say that this is valid still, but the measured move is definitely going to be different now. This is only going to take us back to like 110,500 where there is resistance. Currently we are below the 21-day moving average and below the 200-day moving average, which is bearish. But just like over here, we got a V-shaped recovery back up. It looks like we might be getting this again back up since the stochastics are low and they look to turn back up. So it's very important to see what happens. If not, this could end up being a bear flag that could drop us back down to probably 102,000, or even where this wick is at about 100,320. So again, this is going to be very important to see how this candle closes and the next couple of 4-hour candles as well closes. If we could get back above the 200-day moving average, and especially if we could get back above the 21-day moving average, we start to get bullish again. And on the 1-hour chart, again, we fell below it. This looks bear flaggish a little bit, but we are back above the 21-day moving average. Stochastics were rolling over, but we're back up. If we could get back above this 200-day moving average at 106,432, then we begin the process of recovering this 4-hour 21-day moving average, then the daily 21-day moving average, and things start to get a little bit more bullish. So overall, guys, I'm seeing again this range between 103,000, 110,000. Pretty much we've been ranging around there. We had this news yesterday with the Israel attacking Iran, and it wasn't good for the market. So let's see how this weekend plays out. Again, the weekly candle close is going to be important as well. So far we are flagging out, so right now I just see us ranging. I'm kind of neutral. I'm still bullish because we did lose a 200-day moving average, but we haven't lost it yet. It looks like we're going to regain it, so these next few days is going to tell us a lot. But right now I'm neutral to bullish on Bitcoin. We head over to Ethereum. On the weekly chart, we're still above the 21-day moving average and above the 200-day moving average. We're kind of flagging out here. If we were to break out, this would take us to about 3,381. We're still waiting for that move. Stochastics are getting a little bit toppy here. On the daily chart, I have it in the flag. We finally broke above the 200-day moving average, which was bullish, but then we dropped back below the 200 and the 21-day moving average. Pretty much bounced off the 50-day moving average. This stochastic looks to turn over to come back down. So we need to stay above this 50-day moving average for sure and regain control of this 200-day moving average in order to remain bullish on Ethereum. So right now, this flag is still valid. I'm still waiting for this measured move to happen. Again, everything's dependent on Bitcoin when it comes to the altcoins. If Bitcoin does good, then the altcoins will also do good as well. On the 4-hour chart, this is looking kind of bear flag-ish as well, but the stochastics look to come up. We kind of are trying to reclaim the 200-day moving average, but not yet. That's at 2,575, and the 21-day moving average is basically at 2,700. As soon as we could recover this, we could get a lot more bullish for Ethereum. Right now, I have to stay neutral. Let's see what ends up happening with that. When it comes to Cardano doesn't look too good. Stochastics on the weekly look to roll over. We still have not been able to reclaim the 200-day moving average or the 200-day weekly moving average or the 21-day moving average here on the weekly. When we go to the daily chart, again, we're below the 200-day moving average. We're below the 21-day moving average. Stochastics are on the way down. Cardano still looks a little bit bearish to me. On the 4-hour chart, stochastics are turning back up, but I'm seeing a lot of bear flags here on these altcoins. Unless we could reclaim this 200-day moving average on Cardano, which is at 72 cents, I have to remain bearish on it. When it comes to XRP on the weekly chart, it kind of looks like we're flagging out here. I have this in a falling wedge to break us out. I did another smaller falling wedge that should break us out to $2.70. Last week I told you we could possibly make it back up to $2.30, but that wouldn't convince me unless we could get back above the 21-day moving average on the weekly chart, and we were never able to do that. We wicked here and we've been below it ever since. Stochastics look like they want to roll over. On the daily chart, below the 200-day moving average, below the 21-day moving average, stochastics rolling over as well. So just like Cardano, I'm seeing this being bearish. This looks also like a bear flag. We need to reclaim these moving averages to get bullish again. Stochastics are low, but look, this kind of looks like it wants to roll over. So on XRP, I'm also bearish, and if this bear flag, this whole pole brings us down, we could probably see 2 cents or below on XRP. So we have to be careful. Again, everything's dependent on Bitcoin. And if we head over to the last one, which is gold. Gold has been doing good. On the weekly chart here, I have it on a flag pattern, and so far it looks like we're starting to break out. The stochastics are about to reset on the weekly, but we still have maybe a week or so before that happens. And the 21-day moving average is currently at $3,103. Right now, the price of gold is at $3,433. We take a look at the daily chart. We're above the 21-day moving average. That is bullish. The stochastics turn back up, so that's bullish as well. And you guys know I have this in an inverted head and shoulder pattern, and it looks like it's breaking out, and it's also breaking out of this flag. And this flag, the measured move, would take us all the way to 3,700, 3,750, around there. I would even call it 3,800. And with the stochastics turning back up, it kind of looks bullish. So it looks like maybe we are going to break out with this inverted head and shoulder and also this flag pattern. On the 4-hour chart, the stochastics are a little bit toppy. We are kind of far away from the 21-day moving average at 3,373, but we are kind of flagging out here. So right now for gold, I'm getting a little bit bullish on it. It looks like we might be breaking out soon, especially with all this war talk that's happening between Israel and Iran. People like to go into gold, which is safer. So I could see us breaking out soon, especially if things continue to be the way they are. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.